I'm going to show you here in a moment a mortgage calculator which drives home the point that adding more to your mortgage payment every month pays down your mortgage significantly faster than most people think. The calculator is simple. You're just going to put in the amount of money you owe on the mortgage, the number of years, and the interest rate. Hit the button and it's going to show you month to month how much the mortgage goes down. Then there's a spot where you can put in an additional payment. So let's say you have a $3,000 a month mortgage. You want to add $100 every month. Put that in the calculator, hit the button, and it will show you the number of months, and you can see the difference in how much money you can save. The calculator will be linked below, and please watch the rest of this video because it's going to walk you through exactly how to do it. Thanks for watching. I hope this is helpful. If you like the video, hit the like button, please, and subscribe because we've got many more videos coming up.
So when you follow the link in the description to the mortgage calculator, it'll take you to this page. It explains the input and explains the results, but I'll walk you through it. It's very simple. You're going to put in your mortgage amount here. For example, a $400,000 mortgage. Term in years, 30-year mortgage. And then the interest rate, your current interest rate. Let's say it's 8%. Now the calculator doesn't take into account taxes and things like that. It's just bare bones principal and interest and payment. And then here's why it's useful. It's this extra payment line. At the moment, we're going to put 0, meaning you're going to make your basic payment and you're not going to add anything to it. We'll hit calculate. And here's what it shows you. It shows you your monthly payment without and with an extra amount. So your monthly payment on a $400,000 loan, 30 years, 8%, is $2,935.06. That's the principal plus the interest. If we have a 0 here, we're not making extra payment yet, we will in a moment. So it's a 0, so it's the exact same payment. Then you can see here the total over the life of the loan, or the length of the loan. You're going to end up paying a little over $1 million for this home. 30 years, 8%, $1,056,000. We didn't make an extra payment, so it's the same. And then of course this shows you the total amount of interest you'll pay over that period of time without the extra payment and with. Now if you scroll down here, you'll see it lays out every month exactly how much goes to principal of your payment amount and how much goes to interest. And then the remaining balance as it slowly goes down. So here's month 1, 30-year mortgage, 12 months in a year. We should expect 360 rows because that's 360 months. And then it's paid off. Go all the way to the bottom and there you go. You will owe $0 in 360 months or 30 years. All right. So let's say that you were going to do this exact same thing, but you were going to add to your monthly payment just $200 to your almost $3,000 payment. Here's how it changes. Hit calculate. Now, if you're going to add that $200, this $200, this is why it's so powerful, goes directly to pay down the balance. In other words, none of the additional $200 goes to interest. So the payment line, of course, you can see it was $29.35 like before. And then here's your new payment because you're adding $200, $31.35. Just add $200. What does that do to the total amount that you will pay for the home over time? Well, it's $1,056,000 over 30 years. But now that you have an extra $200, it's going to be about $900,000. So you'll save $150,000. And you can see that works here. Total interest without the extra payment, $650. With the extra payment, $500. Again, it's the same difference amount, about $150,000. Now, what does that do for the amount of time? Scroll down through the months, and we will see how many months we end up with. Oh, you're paid off at 287. 287 is about 24 years. So you knock 6 years off of it. And that was less than a 10% bump. So let's say you're $3,000. Let's say you had a car that cost $400 a month. You paid it off. And you're going to end up putting that towards your mortgage. What would a $400 payment be? A little more than 10% additional. Well, it's going to take the total price of $1,056,000 down to $800. Wow. That's $250,000 you would save over time. Shown here as well in total interest. Why do you save $250? Because you're saving $250 in the interest. And let's see how many months that would be. As we scroll down, we can see the total number of months would be 242. So we scroll back up, 242 months, 12 months in a year, it'll be about 20 years. So you'll knock 10 years off of your mortgage. So if you bought this home when you were 40, you'll be done at 60 instead of 70. Obviously, buy it at 30, you'll be done at 50 instead of 60. And most importantly, you're not just saving time, you're done 10 years earlier, but you're saving $250,000. So that's how you use this calculator. You put in your mortgage numbers, and then how much do you think you can add to the extra payment? And it will significantly decrease the amount of time and the amount of money you'll end up paying for your house. I hope this was helpful. I hope you like the calculator. Leave any comments if you have them. Thank you.
I hope this drives home the point, and you might be surprised at how much money you can save. It'll show you how much interest you save. It'll show you how much you ultimately end up paying for the house. Some people don't realize that, for example, a $500,000 home over time may end up costing you over $1 million, which means you ended up paying over $1 million for the house. Of course, you might have some tax breaks for this or that or the other thing, but this is a basic calculator to show you by adding a little bit to your principal, it can make a significant difference. Thanks for watching.